In the alternate version of exercise 3-1, we're asked to prepare another adjusting entry. Pablo Management has 5 part-time employees, each of whom earns $300 per day. They're normally paid on Fridays for work completed Monday through Friday of the same week. So they work a week and then are paid for that same week on Friday. Assume that December 28th was a Friday and that they were paid in full on that day. So we would have had some type of entry like a debit to wages expense, a credit to cash. Here's the dilemma though. There's some amount of additional time they're going to work before the end of the year, right? They do indicate that the very next week, the 5 employees are going to work only 4 days because New Year's Day was an unpaid holiday. Again, if you go back, normally you would say they would have a 5-day work week, but because New Year's Day was an unpaid holiday, they only had 4 days of pay that next week. Now, they ask us to assume that December 31st is a Monday, and that's going to be the last day of our calendar year is a Monday. We need to prepare an adjusting entry that will be recorded at the close of that particular day. Again, go back. On the 28th, we would debit something like wages, expense, and credit cash, but these employees are going to work one additional day. That's going to be Monday. If we don't make an adjusting entry, our expenses are going to be too low, right? We're not going to really show the cost of those 5 employees working that day. We're also not going to show the outstanding liability. Keep in mind, they don't get paid until Friday, but there's an outstanding obligation as of the end of the day of December 31st. So the particular adjusting entry that we're going to record here, it falls within the category of an accrued expense. So if you think about it, an accrued expense is going to always debit some type of an expense account because we're increasing the expense, showing recognition of that expense. In particular, this is related to their wages, so we'll debit wages expense, but we've got to figure out the dollar amount. Some of our scenarios that we had, they gave it to us, but don't always assume on our exams or extra credit or the like that they're always going to give you the exact amount. You might have to work towards it. So let's figure this out. Let's pull our calendar up for the year. And let's think about this. We mentioned as of the 28th, they were paid, journal entries were made, but they worked one additional day before the end of the year, and that's going to be on the 31st. So how much cost is related to that? That's 1 day times 5 employees that earn $300 each. So 1 times 5 times 300 is going to give us a total wages expense of $1,500. So as of December 31st, we need to show wages expense for 1 day for the 5 employees at $300 per day. What's the other side of the journal entry? Well, we can't credit cash because we haven't yet given them a paycheck, but we have an outstanding obligation, in particular a liability. We're going to call that wages payable. We're going to increase wages payable liability with a credit. So far so good. That's the adjusting entry we'll make on December 31st. Now we're also asked to prepare the entry that we would make on January 4th, which is the very next Friday, that same work week, that Friday of that work week when we actually would give those employees a paycheck. So let's work through that particular entry. Obviously, we're going to have some additional costs related to those employees working, but how much additional cost do we have? So let's bring up our calendar for January and let's think through this. If you recall, the first we indicated New Year's Day, January 1st, is an unpaid holiday. So we're going to go ahead and strike that out. But they do work Wednesday, Thursday, and Friday, so the 2nd through the 4th. So that's going to be 3 additional days. Keep in mind, the 31st, we already recorded the expense as of December 31st as of the end of the prior year. We don't want to duplicate that. Tuesday, they're not working, not getting paid for that particular day. But Wednesday, Thursday, and Friday, there's 3 additional days of expense that we need to record as of January 4th. So 3 days times 5 employees at $300 per day is going to be a total of $4,500. Again, 3 days, 5 employees, $300 per day. That's the additional expense that we're going to show in January related to those 3 days those employees worked. Let's think about it. We had an outstanding obligation of wages payable liability as of December 31st. We're paying the employees, so we're going to reduce that. So we're going to debit the wages payable account for $1,500 to go ahead and wipe that out. No, it's no longer an outstanding obligation. And our credit is going to be to cash. Cash and asset, we're giving that up. And we're going to credit cash for the total paycheck for these particular employees, which is going to be the total of wages expense and wages payable, $4,500 and $1,500 or $6,000. And we can look at another way. Also, we could say it's 4 days, the 31st, the 2nd, the 3rd, and the 4th, times 5 employees times $300 per day would also give us the credit to cash of $6,000. And that's going to be our payment that we'll make on January 4th.